Another down week for the E-mini S&Ps. That's the second consecutive down week. The first time we've seen that going ahead, got to go all the way back to April for something like that. And it's been about a 5% decline over the last 2 weeks. Recall, we did hit those new highs just shy of 3,600, and now we're nuzzling up to the 50-day moving average right around 3,320. So it's been quite a move lower here, but looks to be slowing as we head into the weekend. And obviously things could get dicey next week, but I think ultimately that we've seen a good fair amount of selling. Things should sustain here at the 50-day moving average. If they don't, we'll probably see a next support come in at around 3,200, which was a trade we saw a few weeks ago, a sustained trade. And below that, you've got 3,150, which is the 100-day, which I think is the more significant level to watch to the downside. If we break the 100-day moving average, it looks like things could really get dicey. So right now, we're not quite there yet. As we're holding on, we still have about a 200-point downside move to get to the 100-day, and we are nowhere close to that. So heading into the weekend here, it looks like we're going to be nuzzled up to that 50-day moving average where we are trading at currently. Look at market volatility. Well, market volatility actually was lower this week, despite the selling and despite the declines. Now, last Friday we settled the VIX north of 30 for the first time since June. Today we're going to settle the VIX just below 30. So not a significant move lower, but a move lower nonetheless. And that's kind of has some people scratching their heads given the environment, given the uncertainty of the economy, given the uncertainty of what numbers we could see in third and fourth quarter, which were supposed to be great, but now are maybe being projected to be okay. That's got to have some scratching their heads. But the low for long rates policy that we're in from the Fed will keep fueling risk takers into equity markets because they have outperformed for so long, and that may be one of the reasons why the VIX didn't see much of a bid this week despite the sell-off. Now, next week we have obviously some key data, retail sales, which are not expected to be as strong as they were last month. The claims numbers, which I think are significant given the fact that we've seen the last 2 weeks, we've seen marks below 1 million. But can that continue? That will be closely watched. And then we have the Fed. And the Fed comes in likely not changing a whole lot with their policy, not changing a whole lot with their buying programs and what they're telling the market and their guidance. But we may hear some talk about the inflation targeting, something that's become very popular. Maybe some clarifications from Mr. Powell when he speaks on Wednesday. So not a whole lot from the Fed in the short term that will affect equities, but certainly the Fed will be something to watch nonetheless. So heading into the weekend, we are nudging up against that 50-day moving average, well off those highs, but equities have been resilient here. And despite the fact that we've seen selling over the last several weeks, doesn't mean we couldn't see buyers come back in. But with risks on the rise, not only with economic risks that we're seeing from the Fed, but also with political risks starting to rise as we look forward to those November elections, the rally back may just not be as quickly as we're used to.